All right, well, good evening, everybody. Welcome back to another live stream. Welcome back to Walks in Wall Street. Hope you are all having a fantastic weekend so far. Today is Saturday. Most importantly, it is the first day of October. Can you guys believe that? It is insane how fast, well, summer's been over now for I think 2 weeks, but it's insane how fast time flies. So we are now in the 1st of October. Oh, hold on one second. I just gotta answer this email. Sorry about that. Back on track. So we are now in the 1st of October. And the good news is September is historically the worst month for stocks. And we saw that September 2022 was no exception. Stocks got hammered across the board. And if you remember, right after Labor Day, what I said was usually volumes start to pick up on the exchanges. All of the major money managers on Wall Street are back in the office. So I think we're going to see volumes pick up on the exchanges. And not only that, we are in a huge quantitative tightening cycle. So I believe that September will be a worse than expected month for the equities market, and that is exactly what happened. So we are now in October, the start of Q4, which means for me, my workload for the next, I don't know, I'd say maybe the next 1 or 2 weeks is probably going to be pretty light, thank God. I have been extremely busy going into the end of the month, going into the end of the quarter. Obviously, anybody out there in sales definitely knows that end of the month is always crazy. Now, anybody who's in enterprise sales, right, selling into big Fortune 500 or Global 2000 companies, knows that the end of the month and the end of the quarter is when all of the craziness happens. So I'm going to have a lot more free time these next 2 weeks, which should be nice. But tonight is a Saturday, so we are not going to do our live stream where we analyze the financial markets. I want to talk to you guys about a couple things. We're going to talk about the Bank of England really quick, but tomorrow on our stock market, a look ahead stream is when we will really be doing a deep dive into the pivot that the Bank of England had to do to essentially save the credit markets over there. But we will get started in just a minute. Let me power down my laptop. But I hope everybody's having a fantastic day so far. Really quick, I know that Hurricane Ian has now left Florida, but unfortunately, Hurricane Ian is barreling down on the Carolinas. So to all of our viewers here, the team at Walks on Wall Street, hope everybody in harm's way of that storm is safe and accounted for. And I think it's important to remember during these times that even though we may see extensive property damage and things like that, those things are all replaceable. I know it's sort of hard to think about that when it happens. But you guys, the viewers and people in general, are not. So I think maybe a little bit of a positive reframe there. Obviously, being through Hurricane Sandy on Long Island, I've seen a lot of devastation and destruction to people's property, but the most important thing is that people are safe and accounted for. So everybody in the Carolinas, hopefully you are safe. Hopefully your properties are untouched, but I've been seeing a lot of crazy videos on Twitter and on the news that it seems as if Hurricane Ian re-strengthened and actually hit the Carolinas with as much force, if not maybe a little less force, as it hit Florida. So with that said, everybody, let me see who we have in the chat, and let's get this Saturday night stream started. I see my friend Otto is here, the ABX girl. ABX girl, how are you? I know you're in the Carolinas, so I want to make sure you're good. Hopefully you are fine and your property is good. Everybody's safe. Sweet Country Living in Michigan is here. Says, hey, Tom, good to see you. FredX is here. Adriano is here. Chuck White says, hello out there. My friend Jonathan Richards says, good Saturday evening, Tom. Good Saturday evening to you too. I'll quickly show you guys the kitchen in the WeWork office. So during normal office hours, right here is where you have, I guess, I don't really drink this kombucha thing. I'm not a big fan of it. To me, it smells like alcohol. I actually think there may be a little bit of alcohol in it. I usually drink this one and sometimes the coffee, but on the weekends, the kitchen is closed. But yeah, this WeWork is very, very nice. And I think that if you're an entrepreneur or solopreneur, or even if you have a startup, I think a WeWork office space is a very, very fiscally responsible thing to do. It is extremely cheap, $350 a month, and you could work out of any WeWork office 24/7, 365, not only in the United States, but across the globe. And so that is sort of why I've opted for the WeWork model. Hey, Syracuse says, hey Tom, hope your Saturday is going well. My husband and I are headed to New York. Awesome, for our vacation, our first vacation in over 10 years. Well, I hope you have a fantastic time in New York. You know, October is arguably one of the better times to go to New York City. It's not gonna be super hot. It's not gonna be really humid. Oh, I pressed the wrong button, hold on. And maybe, if you're staying long enough, you'll be able to see some of the leaves changing there in New York. NPC 007 says the office space is too chopped up for me. Yeah, so this side is like the co-working space. This side is the individual offices. I just missed the elevator. It's okay. So if you want your own private office space, you can. I'll explain it to you guys once we get down. Let me know how the internet is holding up in the elevator, everybody. Usually we have a little bit of internet issues when we're here. We'll see. So here's the shoe shine. Let's see how much the shoe shine is. I've never even looked at this. $10. It's actually not too bad. Ooh, friends, it may be raining. Let's see. Do, 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 do. Do, do, do. Do, 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 do. Okay, team. It just started raining here in Miami, Florida. We'll head on the Metro Mover. Austin City Limits, welcome, welcome. Photos from around New York. Said, hey Tom, when I worked in the WeWork, I had a chance to meet people from all different industries. Yeah, you're 100% right. Now, the good thing about WeWork, to photos from around New York's point, is that there's multiple different businesses and organizations in one particular single office, which is what I really like. I meet interesting people, very entrepreneurial focused people doing different software startups, really anything. But what I was gonna say to NPC's point, that maybe the WeWork office is a little bit too, I forget the terminology he used, spaced out, I forget. What I'd like to say is that if you went on the other side of the office, what you'll see is individual office, I guess you can call them like modern cubicles. Let me wipe the camera lens. But Citadel Securities, which is a major market maker, quantitative hedge fund, however you want to call them, on Wall Street, actually just bought out the entire other side of the building, or the other side of the floor. And I believe that is going to be their temporary office space until they build their massive megatall office building in Brickell, which we actually walked past the site that they're actually going to break ground. So Ken Griffin, the CEO and founder of Citadel Securities, it was a really amazing story how he started that hedge fund as well. Started it out of his dorm room at Harvard University. and they are one of the most powerful market makers on Wall Street. And they have actually moved, well, their headquarters is now moved from Chicago, Illinois to Miami, Florida. But to be fair, many of their employees still will work in Chicago as well as New York City and other parts of the world. But their main headquarters is moving down here to Florida. Let me read some of the comments. I see Vonda Howard is here, says that's an amazing price. Yeah, I mean, it's very, very affordable, right? Especially if you're a small startup. Now, I remember, Vonda, we actually did a live stream talking about WeWork specifically. Now, WeWork was founded by a gentleman named Adam Newman. And I'm not going to go into all the details because we've been through it on the stream. And I don't really want to get into like a bashing session against Adam Newman. I think he's a great entrepreneur. I think he's a master sales guy. I just think that, you know, if you guys want a full in-depth focus in on my thoughts on WeWork and Adam Newman, just check out some of our past live streams. I think I labeled it. But I think inadvertently the pandemic has saved WeWork as a company. Because if you think about the traditional model of going to the office every single day, the pandemic really forced everybody to work remotely and to work in a hybrid style environment. So instead of signing a 36-month lease or a multi-year lease on a big plot of commercial real estate, especially if you're a startup, you know, why not spend a couple $100s a month for your employees, maybe offer them a stipend where they could work anywhere they want in the world at a WeWork office, and maybe, you know, you bring the team together once a month, twice a month, you're going to save a ton of money. So I think inadvertently the pandemic has saved that business model. Now, there's actually a couple competitors of WeWork. Not a lot of people know this, but one of them is called ServCorp. So I'm not sure if I told you guys this, but in one of my favorite buildings in all of New York City, it's located on Park Avenue, and that building is called the Seagram Building. And I believe on the 16th floor of the Seagram Building before the pandemic, ServCorp was sort of like a WeWork competitor, was there, but I believe they unfortunately went out of business. I think there's only one other location left, which is in the World Trade Center. But I think it's a very affordable price. $350 a month, and you're able to work wherever you want. Kevin Ramsey is here, says hello everybody. What's up, Kevin? Good to see you. Austin City Limits is here. I see Savi. I see Andy is here. Says hello, Tom, from the one and only Korea, South Korea. Tomorrow Today is here. Good to see you. Michelle K says good evening, Tom and chat. M Wall on the Run says how much does it cost to rent the private office cubicle? So if you want your own private office where you can actually leave your materials there overnight, it depends on the location. So I was actually looking for a private office in the Brickell City Center WeWork location, and I believe they quoted me for the smallest one about $875. Now here's the downside of that. Wow, look at the water level, everybody, on the bay here. It almost looks like the water is going to come up and flood into the street. Now, granted, this is a particular time in southern Florida where the tides are very, very high. It is called the king tides. So if you guys want to see some really incredible videos of the waves in South Beach actually coming all the way up to the boardwalk, check it out on Twitter. I think I retweeted some of the videos if you want to follow me at Walks Wall Street. But that is a major issue here in Miami, the king tides. The waves can come all the way up to the boardwalk. It'll be a normal sunny day, and you'll have, I guess they consider it sunny day flooding here in Miami, but I think it only lasts for like maybe a couple weeks here, the king tides. It almost looks surreal a little bit of all of these major tall skyscrapers, and the water, it's sitting literally like at eye level on the water. It looks almost surreal. If you look all the way across the bay, this is Brickell Key. Now, if you remember from 2 live streams ago, we actually streamed from Brickell Key for the first time ever on Walks in Wall Street. And the reason for that is because if you look all the way in the distance here, all the way here, this is the only bridge that gets you to and from, I guess you can call it the Brickell area of Miami to Brickell Key. There's no other way onto that island. So it's a little bit inconvenient, but the island is absolutely stunning, absolutely beautiful in and of itself. I'll give you one more shot of the Citibank building. We will head over to Brickell. Oliviara says hello from Brazil. Good to see you, Oliviara. Austin City Limits is beautiful view. Sunshine After Rain is joining us tonight. CC says, Tom, can you get mail to the office? You can. You actually can. So I'll try to explain the way it works for the All Access Pass. I feel like I'm a salesperson for WeWork. It's kind of funny. So if you want to work out of any WeWork location you want, I believe it's about $350 roughly, depending on the deal you get. I think I may have gotten it a little bit cheaper because during the pandemic, nobody was going to the offices, so I think they dropped the price substantially. So the way it works is you pick your home office, okay? And the home office that you pick, you can receive mail there. So my home office, I believe, is the 57th Street location in New York City. Hold on, let me wipe the camera. It's gonna be a wet stream tonight, guys. Hopefully you brought your umbrella. So you can receive mail to your home location. So I think that's the location I originally signed up with, is 57th Street in Manhattan, but very seldom do I actually work out of that office. Mainly it is on Park Avenue. Hey, Joseph Hammock is here. Says, hello, Tom. From Glen Rose, Texas. I'm over the road flatbed truck driver. Hey, awesome, man. Trucking is slowing down for dry van and reefer segments of trucking. Compensation rates are falling for everybody. It is scary. Ooh, Joseph, that's some good market research there. Thank you for telling us. So do you think that that's probably happening because, well, you know what, then again, now that I'm thinking about it, remember FedEx earnings report, which we covered on the stream? FedEx had a huge profit warning, and they missed pretty badly on earnings, and they actually had really abysmal forward guidance too. Now, one of the things that the CEO of FedEx said is that shipping volumes are substantially lower, so much so that they are going to temporarily suspend Sunday delivery at select locations and close about 90 FedEx retail locations. And I think this could maybe be a little bit seasonal, and also potentially, a lot of the times on the stream we'll talk about the terminology called pull forward. And I think that during the pandemic, what we had was everybody sitting at home, ordering things off of Amazon and online, and receiving a bunch of packages, right? Because we had nowhere else to go. But now that the pandemic is over, and again, I say the pandemic is over, lightly. I understand that people are still dying from COVID. I get that. But everything is pretty much back to normal now, right? The vaccines are out. Everybody is pretty much back to normal life. There's no lockdowns in the United States. So consumer behavior is changing materially here. You know what? I'll show you guys the Whole Foods. I never really walked down this way. So I think consumer behavior is changing materially. And this is actually what the CEO of FedEx said. He's like, what we've been seeing is people shifting their spending habits from goods and services, or traditional goods, to more services side. Right, so they're spending it on air travel, they're spending it on staying in hotels or going out to eat. because I think people have gotten what you call COVID fatigue. So we got a couple consumer spending reports out. Consumer spending is actually holding up. The only thing that's changed is what consumers are actually spending on, right? So instead of buying electronics and sitting in your house and, ordering things off of Amazon, people are actually going out and traveling because there's been about 2 years of buildup due to COVID. So thank you for telling us that. That's a big piece of industry research we need to pay attention to. If less people are ordering things off of Amazon and online, that means less shipments of goods and services, for sure. So here we are at the Whole Foods market here in downtown Miami. I see Line Sync, Ibrahim, Abdullah, good to see you. Man, it's really coming down here, guys. Hey, Julie M. So speaking of seasonal, how do you think the up-and-coming holiday season shopping will fare for retail sales via current economic state of affairs? I think we'll probably see flat growth. Hold on, let me cross here. I think we'll probably see... Let me just cross. Whenever it rains here in downtown Miami, it is so slippery on the roads. I think it'll probably be flat year over year. Maybe 1% gain, something like that. But I think travel is going to beat expectations. And here's why I think that, and here's my position. And let me know if you guys disagree. I believe, and please fact check me on this, because I sort of slightly remember reading a Barron's article about this. But if I'm wrong, please type in the chat and fact check me, because I'm not always correct. And that's why it's good to have the live chat. I was reading in a Barron's article that this year, on Labor Day, broke a record for all-time traveling over the Labor Day weekend. More Americans traveled this Labor Day than any other Labor Day in history. And I think that makes sense. It's really coming down. I think it makes sense because the last 2 Labor Days for everybody was non-existent, right? You had to stay in your house, you were locked away, you couldn't go out. So this sort of last hurrah, and usually Labor Day is the last real big push for summer before everybody goes back to work, especially on Wall Street. So I think over the holidays, everybody's gonna have their huge get-togethers, especially for Thanksgiving and Christmas. So I think a lot of the spending maybe will shift towards traveling. People are gonna go to grandma's house now, as opposed to not going to your grandparents' house over the last 2 years because you were afraid to give them the virus or whatever, right? I'm not trying to make this stream about a debate about the coronavirus, but there was a lot of people who were reluctant to travel and see their elderly parents or their grandparents over the holidays because they were just not comfortable doing so due to COVID. So I think this is going to be a record year for travel for the holidays. But what do you guys think? Hey, Mike C. This is Tom. Fed Board of Governors expedited the meeting on Monday. What do you think it's about? Well, I don't know. I think what may have to do with it is what we've been seeing out of the Bank of England, which is something I wanted to talk about too, Mike, because a lot of the times, you know what this made me think of? I'll tell you what this made me think of. And many of you on the streams actually remember the 2008 financial crisis a lot more than I did, because I was just a kid during the great financial crisis. A lot of my memory, or I guess knowledge of the GFC, comes from an educational stance as opposed to really living through it. I wasn't of working age during the great financial crisis. I was, still in school, didn't have a job. But one of the things and the terminologies that was used during the Great Financial Crisis was something called moral hazard. Does anybody in the chat remember during the Great Financial Crisis, especially once we bailed out the large investment banks, the term moral hazard being thrown around? Does anybody remember that? In the meantime, let me show you guys a beautiful view of the City National Bank or City National Bank building, or the Miami Tower. Beautiful. Yeah, Ibrahim Azam says I was 2 years old in 2008, so I don't remember. Yeah, I was a little bit older than that, but definitely didn't live through it. Wendy England says, yep. Okay, so a lot of you guys remember the moral hazard argument. So what the Bank of England just did, and I really want to talk about this tomorrow, because we're going to do a big deep dive into what happened in the credit markets. Okay, I'm seeing a lot of yes. So essentially, the term moral hazard comes about because half the country was pretty much split on should we bail these investment banks out? Why should we be bailing these banks out when they crashed the global economy? Now, here's the argument. Okay, I'm going to present both sides. I'm just making sure I don't get hit by a car. So the argument is, if we bail out these banks, that's not capitalism. That's what you call crony capitalism, right? And almost corporate socialism. Because in capitalism, if you take risk and you fail and you go bankrupt, you don't get bailed out. That's what you call free markets. But what happened during the Great Financial Crisis is all of these investment banks were allowed, or what they were doing is nefarious activity. They were making bad loans. They were, making bad loans. Oh, let me cross here. It's so loud out here. I'm getting distracted, and I just want to make sure I could cross safely. I guess we'll wait. So during the Great Financial Crisis, or leading up to, banks were making bad loans, especially in the mortgage market. No income verification, no credit check. This is what you call subprime. And then what the banks were doing is they were taking all of these garbage loans, collateralizing them together and selling them off to investors. And this created a huge pile of toxic derivatives, which unfortunately, once everybody started defaulting on their loans, because the vast majority of people had ARMs, which are adjustable rate mortgages, what happened is the market crashed, and we, the taxpayers, bailed out the investment banks. So the term moral hazard is, if we just bail out these banks every time they do something bad, why should they course correct and not take these ridiculous risks for the next time, right? If anything, it's going to encourage these banks to take on even more risk down the road, because they know that they'll always be bailed out by the central banks. I feel like I've been waiting at this red light for 7 minutes. Let me see. So this is exactly what happened with the Bank of England. This is exactly what happened with the Bank of England last week. They came in there and started buying government debt to bail everybody out. But we're going to do a deep dive into that on tomorrow's live stream, the Market to Look Ahead stream. And I think it's important to pay attention to this, because if you've noticed the trend, right, especially now even with retail investors, what are some of the ridiculous, outlandish things that we've been hearing out of retail investors over the past 2 years? Stocks only go up, buy the dip at all costs, money printer go burr. And that is exactly the moral hazard argument. Why should anybody manage their risk and pay attention to valuations when they know the central bank will just come in and bail them out? And I think this time, I don't know, in my opinion, I don't think the Federal Reserve is going to be here to bail anybody out. I think this could get pretty ugly. But then comes the question, is it that the Federal Reserve doesn't want to bail people out, but it's going to come to a point where they do need to do a bailout, or it would just be cataclysmic catastrophe across the board. So I really forget what the question was, Mike C, but I sort of went on a tangent there. But, essentially, central banks globally across the world has been setting a precedent right now to say no more quantitative easing. We are going to do quantitative tightening to kill inflation. But the problem now is that there's so much debt. A lot of people want to compare this to, the 1980s with Paul Volcker, which I sometimes compare it to. But at the end of the day, there's just so much more debt in the system now. So if we really wanted to do full bore quantitative tightening, the entire credit markets would implode, right? The entire bond market would melt down, which is exactly what happened. And the reason why the Bank of England had to step in there and start buying bonds to provide liquidity. So, quick question for you guys in the chat. What do you think is going to come across the bridge here? Are we talking about a big boat? Are we talking about a small little boat? What do you guys think? Hopefully we have some massive yacht come through. Hey, Great is here. This is 2008 was crazy. So many people freaked out and lost. Yeah, it was insane. Dazzy UK says, hey Tom, how are you doing? I'm doing really good. How are you doing? Hopefully you are doing well and having a great weekend over there in the UK. Sean says, big boat. All right, let's see. Well, here we have the drawbridge going up here. Now, I will say, just for some context here, every time these drawbridges go up in Miami during the summer, it tends to be like a little cargo boat or like a little dinghy boat with a huge long sail. But once we get towards the winter months, you start to see ridiculous yachts go through these bridges. And I think that's because you have a lot of people from the Northeast, a lot of wealthy billionaires driving their yachts in Miami because that's where everybody wants to be during the winter. And I don't know if you guys remember this, but I think in December of last year, when we were doing the live stream. Oh, is it big? Oh, it's kind of big. Yeah, it is kind of big. That one's nice. Wow. They have a full kitchen in the back. So I'm not sure if you guys remember this, but in December of last year, we had this yacht pull through here that had a helicopter on the top. I'm not even kidding. I'm gonna try to remember the name because you guys can Google it, but it's this, I think it was this Swiss billionaire that owned a bunch of pharmaceutical companies, and he docks his yacht right outside of the 1000 Museum building. And he has a massive boat. I mean, this thing is just tremendous. And it has a helicopter on the top. And I think we caught it one time going through here. Hopefully, as we get into the winter months, we'll see more of that. Hey, James Tiger says, do you really need the bridge to go up for that boat? I don't know. I think there's maybe regulations as to how high the GPS navigation system is on the boat. I'm not really too sure. But James, so somebody sent me an email. I got a really cool email. Unfortunately, I can't disclose who it was, but it's somebody really, really big here in the yachting and boat business. One of like the top companies. And he was telling me, he's like, whenever you look at these yachts or these boats, supposedly the GPS systems alone could be several $100,000. Did you guys know that? So anytime you look at the top of any of these yachts, some of the GPS or navigation systems could be in the hundreds of thousands of dollars just for the GPS and navigation. That's just insanity. I never knew that. Maybe we have some boaters here. Wendy England says, yeah, it's true. To me, that's insane. So you buy the boat and then the navigation alone could run you 6 figures. I never knew that. It's insane. Mike C says Ted Turner. I can't say, but it's not Ted Turner. Seven says, do they even have to pay in order for the bridge to go up like a toll? That's a good question. I'm not sure, actually. I'm gonna guess and say no. Ah, Moonstone, you're right. It says Vava 2 has the helicopter. I think that was it. I mean, that's just insane. I don't even know what I would do with something like that. Hey, we have Buy the Book here. Good to see you, Buy the Book. So I think some of these yachts, you may be able to rent them, I'm assuming. Especially this one, being that it has the telephone number. MSF says no way. The ship has a $100,000 GPS installed. Yeah, I mean, I don't know. That's just what the guy's telling me. He says some of these boats, like this one, may have like a 100 grand navigation system. Again, I know nothing about boats, zero. But he was from a pretty credible source. Wow, light engine, insane. Photos from around New York says, I think the sailboat is more interesting than owning a yacht. I actually think I may have to agree with that. There's some people that I know that are really, really interested in, they go crazy over sailing, and they actually do it in the Hudson River in New York, and it looks really cool. I think there's actually teams in sports, like major events, like sailing races that I sometimes see at the Hudson River. Grand Street 1 is like, if you have to ask, you can't afford it. Hey, Dan Zeng is here. Says it's always better to have a friend who owns a boat instead of you buying it. I'll give you guys a nice view of the Aston Martin building. So obviously, since today is Saturday, this is the day on the live stream where we don't have a specific topic planned. So for those of you new here, Monday through Friday is when we have a specific topic. We talk about the financial markets. Saturday is sort of our day off. We just sort of hang out, talk about whatever. And Sunday is our Markets a Look Ahead stream, where we go day by day, Monday through Friday, all of the major big events, news, earnings, FOMC meetings, whatever's happening on Wall Street, we cover it day by day in the Markets a Look Ahead stream. But I did want to share something with you guys, and this was a long time coming here. Now, every Sunday night, what I always do is I do a deep dive through hundreds and hundreds of charts that I'm looking at. And I wanted to share that with you guys, so I actually did it a day early. So if you go to my Twitter page, if you follow @WalksWallStreet, I went through probably the top 14 companies in the S&P 500. And I did a little bit of an analysis, and I posted about 14 charts going through, the top weighted company by market cap in the S&P, which is Apple, all the way down to number 14, which I believe is Visa. So if you want to check that out, it's totally free. Go to my Twitter page. And one of the things I'm really looking at now is for every single company, and I'm talking about the top 14 companies that make up the S&P 500, because the S&P is a market capitalization weighted index, right? So that means since Apple has the largest market cap in the S&P 500, it makes up about 7% of the entire index. Now, what you'll notice, and we've been talking about this on the stream too, is that many of these companies are now correcting down to their 200-week moving average, with the exception of Tesla, Apple, and the like. But what I think is going to happen, I think those companies are really going to follow suit. And being that Apple makes up about 7% of the entire index, if Apple really starts to get a move on down here and corrects back to its 200-day, I think you're going to see an even more sizable decline throughout the major equity indices. Now, and I sort of explained this on my Twitter feed. I posted a bunch of the charts with some analysis, and I sent it to one of my good buddies who runs a firm out in Chicago, Illinois. Hold on, let me cross here. Very slippery. I sent it to the watch list to one of my friends who runs a pretty sizable fund out in Chicago. And one of the things he said was that oftentimes when a particular stock breaks below its 200-week moving average, they tend to be cooked for quite a while. And what essentially that means is the damage is so deep, right? So if you have a stock that corrects all the way down to its 200-week and stays there, the stock is probably down about 35 to 40%, which means you have a lot of investors who are underwater, which is essentially they have a higher cost, or maybe they bought somewhere near the top. So it makes it very, very difficult for these particular stocks to make their way back to new all-time record highs, even if the earnings are stellar and outstanding. And the reason for that is because when you have so much overhead supply on any particular security or stock or whatever you want to call it, when the price bounces back to where the majority of people bought, they freak out many times. It's just simple market psychology. They freak out and they say, oh my gosh, I'm back to break even. I'm going to sell and I'm never going to do something so stupid again. So you really have to be careful to bottom fish a lot of these companies, because just a lot of people think, oh, they're beaten down 60 to 70%. Now is going to be my time to buy. That's really not how you should be looking at it. One of the statistics that I always like to follow is that the true market leaders of past bull markets very seldom are the new true market leaders in the next bull cycle. Very, very seldom. Only about 2% of the time are the previous true market leaders, which means the stocks that have gone up the most in the previous bull cycle. There's only about a 2% probability that those same stocks will lead the market to the new bull market. That's why you need new merchandise. And we always talk about this on the streams. We talk about you need to be watching for new merchandise emerging that has all of those specific criteria that we look for, which is return on equity, high pre-tax and after-tax margins, right? So you want to be looking for new merchandise here. A lot of the names that are down about 60 to 70% right now, those are probably cooked for quite some time. But this is the Cipriani Miami, which is a very, very nice place here. And we always pass, I think the most notable one is right outside of the Deutsche Bank, or the former Deutsche Bank. Deutsche Bank is now migrated uptown from Wall Street to Columbus Circle. They are now in the Time Warner building. But I think that's the most notable Cipriani, but this one is very nice too. Steve says, I'm back. It was my turn to do the dishes. Good to see you, Steve. Welcome, my friend. Even though it's raining out of Miami, it's absolutely beautiful. This is the Miami Riverwalk. Hotel Matt 2008 is here. Good to see you. Or hello, Matt. Sorry, my screen is all messed up because of the water. So right across the river here is Brickell Key. Lisa says, hey Tom, how serious of a threat do you think is Putin willing to use nuclear weapons if he is prevented of taking over the Ukraine? To be quite honest, I am really, really horrible at predicting any type of foreign policy. I think that is probably one of the worst things in my character. I'm horrible at that. But if I had to guess, I would say he's probably not going to use nuclear weapons. But then again, if you guys remember on the live streams when it was rumored that Vladimir Putin was going to invade Ukraine, does anybody remember what I said? Does anybody remember? I said there's no way that Vladimir Putin is going to invade Ukraine. I said there's no way. There's absolutely no way. But I think where I went wrong there is I was thinking like a rational human being, right? I tend to think that I'm a very level-headed, rational person. But when you're dealing with somebody like Vladimir Putin, President Putin, you can't think like a rational person. You need to think like somebody that's crazy. So I don't know. Is he serious? I honestly have no idea. I don't really have any expertise in foreign affairs. I got it wrong when I said I don't think he's going to invade, because why would you telegraph to the world when you're going to plan an invasion? I don't know. So who knows? Oh, let me wipe the camera here. Emilio J says, I remember, Tom, you said something was fishy, something fishy was going on, and then he went in. Yeah, and I mean, at the end of the day, I've always been pretty good at admitting when I get something wrong. I think maybe it's just because I've been investing for quite some time and studying the best investors of all time, like Paul Tudor Jones, Stanley Druckenmiller. And one of the things that you'll see from the greatest investors of all time is they say, look, I'm not concerned about being right, and I'm not concerned about being wrong. What I am concerned with is how much money I lose when I'm wrong and how much money I make when I'm right. And I think you can sort of apply those same principles to anything. And that really just has to go for, you got to drop your ego. Because I don't know everything. I'm not an expert and I can get things wrong. So sort of after I got that wrong, I'm like, all right, I know when I have an area of expertise, and I know when I'm a little bit ignorant in topics. So I think I'll probably just sit this one out and maybe let the experts take a little bit more charge. Because quite honestly, I don't have any military experience. I don't have any background on knowing Russia's military capabilities. I just don't know. So, I mean, I obviously hope they don't. That would be horrible. But I'll just leave it to the experts. So rainy here in Miami. Hey, Vince Fine Arts says, did you see the Port of Miami tunnel? So I didn't, but somebody actually sent it to me in an email, and I had no idea. It looks really, really cool. So, maybe Elon Musk and the Boring Company could actually make that tunnel from North Miami Beach happen all the way to, what's it called? Stony Isles Beach. You never know. Ken Yups is better than China. If China invaded Taiwan, nobody will protest because the Chinese government knows how to silence people, says Ken Yup. Melee says, look at the sign around you. What is going on in the world? Good to see you, Melee. So this is the beautiful Aston Martin building here in downtown Miami. It is almost complete. This building is going to be fantastic. The views from this building is going to be absolutely amazing. You'll have an entire view all the way to South Beach, and you will also have an entire view of the beautiful Brickell Key here. But everybody, once again, if you want to see my deep dive, because I promised you guys for now probably 2 months that I would be posting my charts deep dive. So if you want to follow me on Twitter, if you follow @WalksWallStreet, I posted all of my chart analysis a day early for you guys to look at. Herbert says, Tom, plenty of foreign policy experts were wrong as well. Yeah, and I mean, to Herbert's point, I mean, this is one of those things that is like a total wild card, right? And I think it is very fitting for the times we are in. Who would have predicted that we would go through a global pandemic and then be thrust into this Ukraine-Russian war? I mean, beats me. Hey, James V says, Tom, I listen every night and now my wife thinks you're part of the family. Hey, well, thank you for having me as a part of the family. Love that. Thank you so much, James V. I wonder what's going on in this apartment. Looks like a little bit of a light show here. But thank you for the donation. I appreciate it. Steve says, best part of the day, walking around Miami with all of you. Thank you, Steve. So, Steve, you know what was interesting? Hey, Charles Hong is here. Charles, what's up? Says, hey, Tom from DC. When are you back in New York? I'm not too sure, honestly, when I'm going to be back. But next week may be a little bit kludgy, I would say, because I may be in Frisco, Texas. So more on that later, but I may be in Texas. Yeah, but more on that later. And then I may be in New York. I just got to see. Travel schedule is going to be a little crazy. If you guys go to my YouTube channel, obviously you're already here. That was stupid. I shouldn't have said that. If you go, well, if you watch one of the previous videos I posted during the Hurricane Ian, right here, I forgot what the title of the video is, but right here, during that video, there was like sharks feasting on little fish. It was insane. So there was sharks jumping out of the water during one of the Hurricane Ian bans, and also over here too. Now, I'm not sure why that is. Maybe when the hurricanes stir up the waters. I was reading about it briefly, but supposedly the water temperatures have drastic changes, and that means the fish have to migrate rather quickly. So a lot of feasting, and I guess from the sharks of all the other fish that are trying to find warmer water. So check out that video. It was insane. There was fish jumping out of the water, sharks jumping out of the water. It's insane. Also, where I live, I don't actually live here in downtown Miami. I know a lot of people were asking. I live north of here, about 40 minutes north on a bus ride, right on one of the canals. And one of the cool things is, since the storm, this Hurricane Ian has been stirring up the waters and actually pushing very cold water onto the shores of Miami. A lot of the manatees, and I'm sure all of you know what a manatee is, all of the manatees have actually been migrating from the warm waters up through the canals. So there was like 5 or 6 manatees swimming up the canals by my house. It was beautiful. I think those are the most beautiful creatures, those manatees. I guess they call them sea cows, but they are fantastic to look at. Hey, take a little trip with me. It's just concrete, palm trees, and pretty lights can really capture one's attention. Well, thank you so much. Miami is definitely a beautiful city, and I'm definitely feeling very thankful that we were spared the heart of this storm. Yeah, Dan Zhang says, all I remember from your video is the guy jogging when it was pouring out like crazy. Yeah, I mean, I guess true Miamians are not fazed by any crazy weather. I think as a New Yorker, I'm probably going to have to get used to that, but... All right, so let's head up towards the Bank of America Tower. Anderson Brazil says, I love Miami. Thank you so much. Now, it's not raining like crazy out. It's sort of like that misty rain. It's like you're walking through a cloud. So the camera may be a little bit messed up all stream. So for that, I do apologize. Hey, Kaka Silva, thank you so much. Says there is no safety on that riverside. Thank you so much for the donation. You are very, very kind, and I appreciate you. Jonathan Francis, hey, glad to hear your voice, Tom. Thank you so much, Jonathan. And once again, Kaka Silva, thank you so much for your donation. And once again, on the right, you see the Aston Martin building. So before I forget, everybody, tomorrow we will be doing our Market to Look Ahead live stream, but we will also be talking about the Bank of England having to come in and bail out the bond market. And I think it's going to be a very, very important stream, so you're not going to want to miss it, because we'll do a deep dive into essentially modern monetary theory and central banking. And I think ever since the lows of 2008, the great financial crisis, we've been in this situation where our financial system, not only here in the United States, but globally, only operates, I'm going to use operate lightly, but only works and functions as long as there's new debt being issued in perpetuity forever. And that's a big issue. And when you try to take that punch bowl away, right, when you try to do quantitative tightening as opposed to quantitative easing, which includes artificially suppressing rates, central banks buying bonds. And one of the reasons why they do that is because when you buy a bond, if you understand the correlation there, when bond prices go up, yields come down, or yields, when bond prices go up, yields go down. Hold on, let me cross here. One second. Gotta wipe the lens. Okay, so when bonds are having a massive sell-off, right? So when the bond prices are going down, those yields spike. So that's exactly what we've been seeing now. When we've had a massive sell-off in the debt market, yields have been ramping. But when central banks are getting in there and buying bonds, it suppresses yields and provides liquidity to financial markets. However, when you don't have an automatic bid in the market, when somebody's buying bonds and bidding up the price, you have a situation that we have where the market essentially goes no bid and yields start to spike uncontrollably, in which case the system locks up and you have a total system failure. And from there, the central banks have to cave in and start buying bonds again to suppress yields, which is almost coming to a point where we are in this perpetual debt cycle that seems like it can't have an end at all. So that's exactly what happened with the Bank of England. So we're going to talk about that a little bit. Austin city limits is be careful, Tom, with all the traffic. Yeah, and the rain is really starting to pick up here as well as the wind. But this is the W Hotel in Miami as well as the Icon Brickell. I think it is a very, very unique building here. Hey, Light Engine says the October effect is the idea that the market tends to have a bad month. Routinely in October, the month has seen legendary crashes. Yeah, and I think I may have to agree with you because this market is very, very thin right now. And if you look at my Twitter, I posted the deep dive chart analysis. So if you follow @Walks Wall Street, one of the things that we've been seeing is a lot of these, I would say the top 15 stocks in the S&P 500, about half of them are already below its 200-week moving average, which is just unprecedented and ridiculous. I think the only stocks right now that make up a large chunk or a large swath of the S&P 500 that are still above their 200-week moving average is Apple, Tesla, I think Berkshire Hathaway. But I believe that those stocks are going to head down to the 200-week. And the problem with that is if you think about the ramifications of that, Apple, since the S&P 500 is what you call a market capitalization weighted index, so since Apple has the largest market cap, about 7% of the entire indice is made up of Apple, right? That's a pretty huge weighting. So if Apple drops another 25% down to its 200-week, this stock market or the overall indice, the S&P 500, could see substantial selling pressure here. We are oversold, so we may see a little bit of a bounce, but maybe we have that October effect. I think you're right. Rachel Abreu, good to see you, Rachel. Thank you for being here. Iris Lou says most stock prices are 30% off already. I think the majority of stocks are even more than that. If you look under the hood at some of the micro caps and the Russell 2000 stocks, I mean, these things are absolutely blasted. Down like 80%, some of them. Melee says, Tom, you got to buy stocks with dividends. Well, one of the interesting things, Melee, and I think your point is correct, but if we head into a recession, which I think we are in a recession now, I'm just going to cross the street anyway. It's been too long. So if we get hit and roadkill, so be it. One of the things, if we turn into an earnings recession, which means companies' earnings start to take a material hit, I think the vast majority of this selling that we've had so far in the stock market has been due to interest rates. I don't think Wall Street has yet discounted this market for an earnings recession. We'll talk a little bit about what that means in tomorrow's stream. But a lot of people start to flock to big dividend aristocrats during recessions because they want to replace lost income from stocks going up. But the problem is when companies face an earnings recession, you don't think they're going to cut their dividends? I mean, maybe they won't, but when companies are really, really hurting and they're seeing profits decline across the board, sometimes they cut their dividends. And that's actually what we saw during 2020 with the COVID crash. You had many companies issuing cuts to their dividends, which could actually perpetuate additional selling. But I think you're right. Hello Mate 2008 says, Tom, earnings losses are about to come next. I think you may be correct. I think I agree with you. Look at how beautiful the lobby is here. Hey, Ibrahim Azam is here. Good to see you. Dan Zhang says, Tom, I think you could buy a waterproof case for your phone on just the rainy days. Well, I think the iPhone 13 mini is supposed to be waterproof, isn't it? I mean, maybe I'm wrong, but I think it may be, I don't know. I think it may be waterproof. Hopefully it is. Charles D says, QYLD. Good to see you, Charles D. James Tiger says, our capital position at the moment is strong. Former Lehman Brothers CFO, 5 days before the firm filed for bankruptcy. I think we will see another Lehman Brothers somewhere, says James. So James, I'm not sure if you heard, Credit Suisse is allegedly on the brink. Now, I've been following Credit Suisse for some time. I think it's trading at about $3 a share. I actually have two friends who work as associates at Credit Suisse, so I don't really want to trash talk the bank too much, but supposedly Credit Suisse is on the brink of going under now, if you look at their spreads, but I don't think that's been confirmed, although it was very Lehman-like, because I think the CEO of Credit Suisse came out yesterday and said that, oh, we are very well capitalized, everything is fine here at Credit Suisse, but there's a rumor on Wall Street that we could have another Lehman Brothers moment, and that moment may come from our good friends at Credit Suisse. The ticker symbol is CS. So I think I posted an interesting chart on my Twitter of Credit Suisse on a monthly time frame. And it is just a brutal looking chart. It actually is very reminiscent of Deutsche Bank. So if you want to look up the ticker symbol for Credit Suisse is CS. Ticker symbol for Deutsche Bank is DB. Now, a lot of people have been, I guess you could say, really hating on Deutsche Bank for good reason. I think it's just because they have such toxic derivative exposure across the entire book. But maybe we'll do an entire live stream analyzing the balance sheets of these banks. Oftentimes the Federal Reserve will do stress tests on a suite of banks to see if they can handle these types of calamities. But As of right now, Credit Suisse is really reeling. And I think their share price is $3. Hold on, let me cross. All right, team, let's go into the Brickell City Center and get into some dry location here. Jean Paul says, Tom, you have not been to Lincoln Road in a while. That is correct. I have not. It's just a little bit too far out of the way for me, and I usually take the bus home, and it is a pain taking the bus to where I live from South Beach. But I love the area. Absolutely love it. So if you remember on the live streams, one of the things that we've been talking about, and I used to call it my contrarian thesis. Does anybody remember us doing these live streams, and right when interest rates started to go up, a lot of people have been coming out on CNBC and Bloomberg, and they've been saying, hey, since interest rates are going up, this is going to be a great time to buy the banks, right? Buy JP Morgan Chase, buy Bank of America, buy Goldman Sachs, and the like. But I actually said, no. I think that's actually the wrong move, and here's why. Especially as you're looking at the investment banking side of the house, okay? And you're talking about IPO issuance. So in 2000, essentially here's the bear thesis, and it's actually played out quite well. If you think about 2021, it was an absolute boom year for the investment banks, specifically in terms of equity underwriting and new IPO issues. Right, so whenever an investment bank issues a new IPO or helps a company go public or merges a company through M&A activity, they get ridiculous amounts of fees, right? So many investment banks make the majority of their money off of fee income and advisory services. Well, in 2021, investment banks had record profits. So one of the things that I said is, I'm like, guys, interest rates are going up. Right? Historically, that is very good for banks. That is true, but you're leaving out one key thing. Interest rates are probably going to go up for a prolonged period of time because inflation is ramping in the United States. So a prolonged period of higher interest rates means that is going to decimate the initial public offering market. No company is going to be able to go public during an environment where Fed funds rates could go to 4%. And that's exactly what's happened. IPO activity has dropped 99% on Wall Street. There's essentially no companies going public now. And the companies that did go public in 2021 via traditional IPO or through the scam SPACs, I actually take that back. I can't say scam SPACs. I may get sued. But I think you guys sort of picking up what I'm putting down. All of them are significantly below their IPO prices. Because when money and liquidity is awash, you tend to get irrational exuberance in markets. So essentially the investment banks are going to have pretty much no fee income coming in through equity underwriting or advisory services to take companies public. And number two is a lot of these banks make a lot of money off of refinancing people's mortgages. Now, 2 streams ago, we did a little bit of an impromptu poll, and I said, how many people in the chat own a home and have an interest rate below 5%, at 5% or below? And it was about 90% of people. So as of yesterday's close, a 30-year fixed rate mortgage, the average 30-year fixed rate was going for about 6.87%, which means a lot of people are actually getting quoted 7%, and some people are getting quoted a little bit less. So if the vast majority of people have rates sub 5%, well, you've now just eliminated the entire market of refinancing, right? So those are 2 huge money makers for banks that have gone to zero overnight. So I've actually had a massive short thesis out, and I've been saying this on the streams for a while, to say, why would I go long a bank here when IPO activity and investment banking activity is about to crater and the refinancing business is going to literally become extinct for probably a couple of years. So just watch for that. I know JP Morgan Chase, I posted a chart on my Twitter at Walks Wall Street, probably going to break below its 200 week. I think it may already be under there. We'll see. Zach Drew says, Tom, I think the Fed funds rate is going to be 4.5% next year. So Zach Drew, I actually have a question for you. I have a question for you and everybody in the chat. So being that the Bank of England was forced to pivot and start quantitative easing, do you think the Federal Reserve will be forced to pivot and start quantitative easing as well? What do you guys think? Let me know. Hey, Pixelogic says, cold, heat, or rain, you're a dedicated man in your stream, Tom. Thank you so much for being here, Pixelogic. I appreciate it. But if you guys are enjoying tonight's live stream, feel free to leave a like on the video and hit the subscribe button if you're new. We usually go live around 8:30 p.m. between New York City and Miami, Florida. And we'd love for you guys to join in on the chat. So everybody is saying you don't think the Federal Reserve is going to be able to pivot. So I agree with you guys, and you guys know my stance. I don't think the Fed is going to pivot anytime soon. However, I think the Bank of England threw a little bit of a curveball at us. And here's the curveball. If the financial system breaks, which it broke, it did break, the bond market broke, and their currency broke, the Federal Reserve may be forced to step in. I think the only reason why the Federal Reserve isn't pivoting right now is because we have extreme dollar strength. The Dixie is, I think, at 113 still. So I think so long that the US dollar is exceptionally strong, I think the Federal Reserve is not going to pivot. But if the dollar starts to fall and the bond market starts to sell off and yields start to go bananas, then I think they may be forced to pivot, because you would have a complete lockup in the credit market, a complete lockup in the system, just like you had in 2008. So this is the second floor of the Brickell City Center. This is like an indoor, outdoor style mall. Very, very clean, very beautiful. Hey, we have my friend Eyeglass Lady here. Good to see you, Eyeglass Lady. Happy Saturday to you. Hopefully you're having a fantastic weekend so far. Thank you for joining us on tonight's stream. Hello, Mate 2008 says, there is a world inflation. It's not just the United States. 2023 will be high interest for a whole year across many countries. Says, hello, Mate 2008. Zach Drew says, I don't think they will crack like Bank of England. I think the market will bounce next year. If they do pivot, it will be second half of the year. Okay. What's next is yes, but 6 to 12 months from here, public sentiment will make them do it. This is what's next. All right, a lot of good opinions here. I'm liking it. Thank you, guys. Hey, Boozy M says, hello, Tom. Do you know James and Carla? Absolutely. Well, I don't know them personally, but I know of them, and they're very fantastic people. And they have a wonderful dog, which I am very, very big fan of. And I think they may actually have a place down in Florida too. You know, isn't that funny that almost, well, I guess it's common, right? A lot of New Yorkers tend to have places in Florida, right? So what, me, AK, and James and Carla have a place here? I think they may be professional photographers too. Dr. Longus is true, Tom, and what happened in England may happen here, quantitative tightening and then pivot, too early to fix things. Yeah, I mean, Dr. Longus, here's my concern. Now, I understand that raising interest rates it's not necessarily going to mean it fixes inflation, right? That is true. But, to Fed Chair Jerome Powell's point, what they believe is that they cannot afford to let inflation run out of hand, because if you think about the vast majority of Americans in the middle class and in the lower class, you can't survive inflation at 9% a year. It's unacceptable. A person who is from a high net worth individual or ultra high net worth, you can survive that. But the middle class and the lower class, you're going to break these people, especially people who live on a fixed income, right? So let's say if you're a family of 3 and you budget $500 a month for groceries. I'm just using rough numbers. But your grocery bill is consistently going up $100 a year per month. That's a major problem, right? That's going to then start to force people to make decisions. Okay, do I pay my grocery bill, or do I pay the electricity? Do I pay the phone bill, or do I pay the mortgage, right? And it may sound crazy to some people, but that's the reality for many people. So I agree with Fed Chair Jerome Powell that you need to get serious on inflation, because inflation hurts the little guy more than it hurts somebody that's an ultra high net worth individual, right? Or just somebody that's making 200 grand a year. So I do agree that we need to get very, very tough on inflation and raise rates. Here's the only problem that I see on the horizon. In 1980, when Paul Volcker had to raise interest rates to 20% to kill inflation, he was successful in doing that. But the problem is, we had a lot less debt in 1980. Now we have a zillion times more debt. And not only does the United States have more debt, emerging markets have tons and tons of US-based dollar-denominated debt. So as the Federal Reserve starts to raise interest rates, this puts upward pressure on the US dollar, or the Dixie. And the problem is when the dollar is very, very strong, and emerging market companies and emerging market governments have a lot of dollar-denominated debt, well, it makes servicing those initial loans or those existing loans extremely, extremely difficult. And that could literally bankrupt a lot of emerging markets. And maybe it makes governments around the world have to reassess their budgets. Okay, do we spend more on healthcare? Do we spend more on education? Or do we cut back so we could service our dollar-denominated debt? And you're already seeing currency reserves at many of these countries in the emerging markets dwindle to almost nothing. And I think we're going to have to see the International Monetary Fund come in here and bail some of these countries out, perhaps. So that is my only concern. If we raise interest rates, this may have huge global macro ramifications that we just weren't facing in the 1980s. So I don't know. I mean, we could maybe force to pivot, but then that is going to thrust us in an environment where it's just going to crush the average working person, because inflation is going to ramp. So it's definitely very scary, but I will tell you guys this. Here's some good news. Whenever I start to get very, very negative on the market anytime, that usually tends to be around when we're going to have a little bit of a bounce, or we're going to have some sort of a major trend change in the market. That is very possible. Now, I'm not saying we're at a bottom in the market. I think we're going to go materially lower here. But if you look back throughout previous bear markets, you've had these neck snapper rallies where the market could rally 25% and then roll back over. So always sort of don't get too thrust on one side of the market bias. You got to be able to adapt and pivot. So 825 says, thank you, Modern Monetary Theory. I think to get us out of this, we need to print more money. Yeah, I think you're right. And modern monetary theory is horrible. It's so bad. This is all this Keynesian garbage. Keynesian economics, which has got us to this position. And to your point, that was such a good comment. Who said that? 858. To your point, the problem with modern monetary theory is that the system only works if you have perpetual debt assurance in perpetuity forever, right? The moment you take away that heroin from the addict, the system freezes up and goes bust. So I think you're right, and I think we're essentially in uncharted territory here, and I don't really know how it ends, but I think if we start quantitative easing again, I think it's going to be risk on again for equities. But if the Federal Reserve continues to tighten or do quantitative tightening, we're going to continue down this path of risk off for equities, and I think we're going to see valuations contract materially. You know, I'm surprised about how busy Brickell is today because it's so rainy and it's not really good weather. I thought Brickell was going to be dead, but Brickell and Mary Brickell Village are really, really packed today. Hey, we have our friend Brevard County Real Estate. Brevard County Real Estate, are you good? How are you holding up throughout the hurricane? Hopefully your property and your friends and family are safe. Really quick, I want to make sure everybody in the Carolinas are good. I know we have the ABX girl, which is our good friend from the Bronx, but now she's living in the Carolinas. She's good. So hopefully all of our viewers who are from the Carolinas, you guys are safe. So just want to do a quick check on that. You know, this storm, Hurricane Ian, I've never seen anything like this in my life. Has there ever been a storm where it crushed Florida and then it revamps up from a tropical storm and then goes back to a hurricane and then pounds the eastern side of the United States? I mean, this is just insane. And the amount of damage that this storm has caused and is going to cause, and it's not even done, is just, I'm almost speechless about it. It is just insane. So hopefully everybody is fine. Hey, Jose is here. Good to see you. Yeah, I mean, definitely, you know, maybe Bitcoin could be an opt-out. We'll see. So this is the SLS Tower here. And I think they're actually going to build an identical one right next to it. Austin City Limits says, Tom, clean your lens. So I don't think I'm going to be able to clean my lens anymore because my shirt is so soaking wet that when I try to clean the lens, I don't think it works. But we'll try it. Yeah, Charles D says they say parts of Florida is underwater. Yeah, I mean, it's crazy. I was watching some of the press conferences today, and still, even now, parts of Fort Myers, Florida, the water is still sitting there. So, I mean, a lot of I don't know how to explain this. A lot of the footage that I've been seeing coming out of Fort Myers is reminding me a lot of Hurricane Sandy. And the reason why I say that is because the storm surge is the absolute worst part of the hurricane. It's not necessarily the winds or anything like that. It is 100% the storm surge, because the storm surge brings all of the debris. It brings literally feet worth of sand on shore. I remember after Hurricane Sandy, I was walking Long Beach, parts of the Rockaways, Island Park, Oceanside, and Long Beach, and you saw the first floor of people's homes filled to the top with sand, totally filled to the top with sand. And as I was seeing some aerial footage of the Hurricane Ian, Fort Myers looks almost exactly identical to the way Long Beach looked after Hurricane Sandy. So, and you know, for Sandy, it took over 5 years for them to rebuild. And many homes are still even being elevated to this day. Because one of the things you'll see after a massive hurricane pushes through is you'll literally have to elevate the house. So I remember, commuting home to Long Beach, visiting my uncle, and you would see cranes literally lifting houses on stilts and elevating them 10, 12 feet in the air. So if this ever happens again, hopefully the storm surge won't cause as much damage. Charles D says, Tom, they say parts of Miami never recovered from Hurricane Hugo in the 1980s. Yeah, I mean, hurricanes, natural disasters are horrible. Horrible, horrible. Dusty Cole says, I'm in Northern Virginia and we're getting days of slow and steady rain, no problem. Well, at least it's not horrible damage like some of the Carolinas got. Jonathan Francis, auto loans was 18% in 1981. Yeah, that's another big risk is potential defaults in auto loans. We'll save that for the markets to look ahead stream tomorrow. Hey, NMB045 says, hey Tom, I think Hurricane Katrina in 2005 was like that. It hit Florida as a tropical storm and then hit New Orleans as a Category 5 after picking up so much moisture on the Gulf of Mexico. I think you're right, NMB045. Now, correct me if I'm wrong, everybody. This is Mary Brickell Village, by the way, in Miami. I think what caused the vast majority of the damage during Hurricane Katrina was not the wind and it wasn't the rain. It was the levees or the dams or whatever you want to call them that broke, and that flooded the entire city. So I'm not too sure if it was much the wind damage or the rain. There was a malfunction in those levees, and once they broke, you had hundreds of thousands of gallons of water pushing through the city of New Orleans, and it caused absolutely cataclysmic damage. It's horrible. It's heartbreaking. Hey, JF. What's up, JF? Good to see you, my friend. This is Tom. I was looking at a house to buy in New Jersey Shore that would have been required to be lifted. Yes. So, Jeff, it's important that you bring that up, and I'll tell you why. If anybody, and I have some expertise here on the South Shore of Long Island, New York, if you see a home that is attractively priced in any of these neighborhoods, okay, in Long Beach, Island Park, Oceanside, Center Avenue, if you see any, and also the southernmost part of Massapequa on Long Island, if you see any home that you're like, wow, this is an attractively priced home in any of those areas, I'm going to tell you why it's at an attractive price. It's because once you buy that house, you will be mandated by law to lift that house. And that could cost $75,000 to $100,000. I mean, when my uncle rebuilt his house after Hurricane Sandy, it was an astronomical amount of money and a headache in order to meet the FEMA regulations or the rules, I forget whatever it was, to lift the house. So if you see any home in Island Park, Center Avenue, Oceanside, or Long Beach with a very attractive valuation or price, that's why. It's because once you buy that, you're going to be mandated to lift that house. Hey, Michelle McGraw is here. Good to see you, Michelle. Thank you for joining us on this very rainy day, rainy afternoon, night, whatever you want to call it, in Brickell, Miami. I think we covered a lot tonight on the stream. We talked about central banking. We talked about the Bank of England. We talked about a potential earnings recession in the S&P. But tomorrow we're going to do a little bit of a deeper dive into that, as you guys know. JF says $75,000 to $150,000 was the quote I got to lift my house. Yeah, that sounds reasonable. That sounds exactly what it costs. So just buyer beware, I would say, if you're looking in those particular areas. Now, many New Yorkers that I know are choosing to buy pieces of property in New Jersey. Now, I will also warn you that not many people know this, but New Jersey floods a ton because New Jersey has tons of rivers. So you really got to do your due diligence. If you're looking at a piece of property in New Jersey and it looks great, I would knock on every single door in the neighborhood and ask them, hey, how often does your neighborhood flood? Have you ever flooded? Because last year, after like really, really drenching rains we had in New York City, the flooding was so bad in New Jersey that there was actually many casualties. I think about 50 people died in New Jersey just after like a normal, well, I'm not gonna say normal, above average rainstorm. So New Jersey floods a lot. So you gotta just be aware of that and make sure you're not buying in a particular neighborhood that floods. Hey, the ABX girl, good to see you. Dusty Cole is here. Hey, Latha is here. Good to see you, Latha. Welcome. Mike Skate TV, good to see you. Just hopefully we'll have you in New York soon. So I may be in Frisco, Texas for business, but I will let you guys know when I'm gonna be back in New York. So maybe we'll take the Metro Mover back. Yeah, we'll get on the Metro Mover. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually go live about 5 days per week. Well, that plane was super low. 5 days per week between New York City and Miami. So Monday through Friday, we talk about the financial markets. We cover a specific topic. Saturdays, we just hang out. And Sunday, which is tomorrow, is our Market to Look Ahead live stream. But I will take you guys on the Metro Mover with me, which is the free train service here in Brickell that goes to downtown Miami. Mike says, can't wait for the Frisco stream. Ooh, so Mike, I'm not going to be live. So if I do wind up going to Frisco, Texas, I'm not going to be doing a live stream. So I'll tell you guys, I can't disclose the exact company's name, but I'm working on a very, very big deal with an oil and gas company. And essentially, I have to source a lot of intrinsically safe equipment. Now, if anybody's familiar with, oil and gas or chemical companies dealing with them, any sort of electronic device that they use or their field people out in the field, they have to use intrinsically safe equipment with specific certifications. Obviously, if you're working on oil rigs or building stations or whatnot. So I'm going to be doing a little bit of a presentation about intrinsically safe devices, working with a major oil and gas company. So if I do wind up going to Frisco, Texas, we will not be live Wednesday or Thursday, but I should be back live either in New York. I'll either go back to New York for a couple of days or I'm going to be in Miami. But I'll keep you guys up to date. Is it just me, or are these planes taking off really, really low? Supposedly this is a very famous, I guess, bar and restaurant here. Hey, Eyeglass Lady, thank you so much. Hey, Melissa White, just telling my grandparents have a few houses in Punta Gorda. Luckily, it was minimal damage. Well, thank God, my friend. Thank you, God. And more importantly, thank God that your grandparents are safe. I think the biggest thing maybe to do a quick reframe on the situation. It is devastating that people essentially lost everything, their homes. But if you were lucky enough to survive the storm unscathed, you know, people are not replaceable, but things are. There's going to be a lot of insurance money, FEMA money. People will be able to rebuild. I know it's horrible and devastating in the short term, but people are not replaceable, but those things are. I think that's the only type of reframe I could do here. It's an absolutely devastating event, but the good news is that it's going to be rebuilt, right? That's the good news, but you know, it's just as long as everybody's all right. Daz, this is how far away from Miami? What do you mean? Do I live or am I going? So a little bit of real estate news here. So this entire section right here of Maribrickle Village is going to be completely demolished, and supposedly there's going to be identical super tall residences that are going to be built in its place. So since it's Saturday, I'll give you guys a quick little update on the stream. So what I want to do, maybe to add another, I guess, sort of interesting aspect of the live stream, and I think I've told many of you already, but I'm trying to get access to specific properties. So maybe every Thursday or every Friday on the stream, we'll actually walk to a specific property and analyze the deal in real time. So let's say if we're in New York, we'll, you know, at the top of the hour, we'll walk to a particular property. We'll analyze the deal in real time. We'll do a little bit of a tour, not only of the property, but of the neighborhood around it. And we'll do the same thing here in Miami. And I really want to try to focus on maybe some multifamily units, duplex, triplex. We'll analyze the deal. We'll talk about the current interest rate environment, and also maybe some, you know, condominiums and apartments for potential investment purposes. I think it'd be kind of interesting maybe to get access to some of these apartments to show you guys. But that's coming down the pike. It's work in progress. Greg Peters says, Tom, Texas has some of the best barbecue in the world. All right, Greg, I'm going to say something that may upset a lot of people. Ooh, I think they just collided. See, that's why I'm super cautious crossing the street, because these people drive like maniacs here in Miami. So I was in Austin, Texas, I think I told you guys, and one of my friends suggested that I go to a barbecue place called Terry Black's. Now, is anybody familiar with Terry Black's? So I'll tell you a quick story. This particular place was the best barbecue I have ever had in my life. It totally ripped my face off and blew my mind. And the guy there that was cooking all of the meats, or smoking all the meats and the sausage, he was such a nice guy. He actually gave us a tour of like all of the smokers, and he was explaining the type of wood that they use to smoke all of this barbecue. It was just the coolest experience ever. You don't have something like that in New York, so it was awesome. I'm not sure if anybody's familiar, but Terry Black's in Austin, Texas was a great time. So if anybody's in the city of Austin, I recommend that place. Like, you have to go to that place. That place is fantastic. Hey, Chump Villa says, Tom, I live in Austin, Texas, very familiar with Terry Black's. So what would you rate that? Since you're from Texas, you're probably a little bit more experienced in barbecue than I am. But that place blew my mind. That place was fantastic. Wendy England says, Kentucky barbecue is amazing. Never been to Kentucky. I would like to go. Hey, Jose says, hey, Tom, stop in a bar and get a drink for us. Jose, if you're here, man, I'll get you one. JF says, Tom, what's the hardest part about putting out the newsletters as often as you do? I've actually been rather slacking on putting out, I've actually been slacking on putting out the newsletters, mainly because I've been really busy at work, which is good, because when you're busy at work, I guess that means you're doing well, I guess. So I have to be more disciplined in putting out the newsletter, but I enjoy it. I enjoy writing, and I think you become a better writer. And that's what I want to do. I want to become a better writer. So, hey, the AVX girls is us, Northeastern folks. Base's barbecue, wow. Melissa White says, Tom, answer about kayak. What do you mean? Styles says, can you do lives for us in Texas? I don't see a lot of streamers there. Well, I'm usually not in Texas. That was the first time I've ever been to Texas in my life. Was in Austin, Texas, but next week I may be, keyword maybe, going to Frisco, but I'm probably not going to be able to stream there. Yeah, Eyeglass Lady says writing skills are very important. So here's one of the things that I want to get better at. So I tend to have a lot of ideas circulating in my head at all times, but sometimes my grammar could be a little rough, I would say. So I think now that I've noticed that, I want to continue to write the newsletter so I can get feedback from you guys to, try to improve that. But for those of you who don't know what we're talking about, if you scan the QR code on your screen, it'll bring you to a landing page. I write a free investing newsletter for the group called Behind the Street Newsletter, where we talk about not only the US equity market, we talk about emerging markets, fixed income, real estate, and I try to put it out usually every other Tuesday after the market closes. So if you want to know my thoughts outside of the live stream, feel free to scan that QR code, and punching your email address will send it to you for free. But if you just want to know my basic thoughts throughout the day and connect, you could follow at Walks Wall Street on Twitter, where I post a lot of my equity research there for free. Hey, Dan Zhang says, Tom, a friend of mine who works in a tech sales job wants to go to Bloomberg. So Bloomberg is a good company. You'll get a very good base salary, but they don't pay a lot in commissions at Bloomberg. I would tell them to stick in software sales. Miguel, good to see you. So I had a friend who worked in Bloomberg. They pay a very, very hefty base salary, but the commission potential is not there at Bloomberg. Also, I'd say, if I had to go back and do the entire thing over again, I would focus on cybersecurity sales as it relates to software sales. I would focus on cyber sales. So you could think about Palo Alto Networks, maybe Zscaler, CrowdStrike. All right, I think we could try to cross. So this is South Miami Avenue. I don't know.
All about South Miami, baby.
Hey, good to see you.
Oh yeah, dude.
Well, I guess we'll try to. Yep. We'll try to cross now. Is there way more people here in Miami than there usually is on the live streams? Maybe, I guess, since it's October, a lot of the snowbirds are coming back. Who knows? So here's Lucid Motors. They went public via SPAC, which is a special purpose acquisition company. I think you guys all know my opinions on the SPACs. I think you're actually going to see intense litigation as it relates to a lot of these investors who are pushing a lot of these SPACs, many of which I would consider outright frauds, allegedly. Now, I don't want to say they were because of legal reasons, but I think you guys know my opinions on the SPAC market. Dan Zank says, I was researching some of the top paid tech sales jobs. I was shocked to see companies like Snowflake, Workday, and Datadog. Yeah, so Workday is like an HR software. They trade under the ticker symbol WDAY. Datadog, yes, they do pay a lot. Trade under the ticker symbol DGOG. And Snowflake, yes, they do. But I think one of the reasons why they paid a lot is because they were a very, very hyped company. I mean, Snowflake is a very, very good company, don't get me wrong, but yeah, I mean, I guess my piece that I would say about software sales, I would try to look for a vertical that is exploding, right? So you want to be selling a product or a service into a massive total addressable market that is expanding rapidly. And for me right now, what I see is, and we've been talking about this almost ad nauseum on the live streams, what I see is the cybersecurity market and corporate cybersecurity spending is going to continue to balloon irregardless of if we have a recession or not, because cybersecurity hacks and attacks are going to happen in perpetuity with more frequency. If I had to go work as an enterprise account executive at a software company right now, it would undoubtedly be Palo Alto Networks. That would be the number one choice, because not only are companies going to need to have a cybersecurity strategy, but governments will too. So sort of the hierarchy at a software company is you could be selling into small to medium-sized businesses. You could be selling into enterprise accounts, which are large customers like Fortune 500, but you could also be selling into something called SLED. So SLED sales is state and local government and education sales. And if you're a cybersecurity company, that could be a very, very lucrative sector to sell into. Because I think it was 3 weeks ago now on the stream, what did we talk about? We covered a huge cybersecurity attack that hit the Los Angeles public school system. We covered a massive cybersecurity attack on Suffolk County, New York, Long Island. So these particular organizations are going to need to increase the amount of spend on cybersecurity. Now, I have a little bit of a networking side from a traditional telecom point of view. So I have a pretty good understanding of how networks are actually built in terms of architecture, right? So if you think about way, way back in the day, okay, think about traditional hub and spoke networks, okay, for all of those network architectures out there, or architects out there. Now, a traditional hub and spoke network was very, very easy to secure. And it was something called castle and moat cybersecurity. So that is, throw up a firewall and anything on the inside of the firewall is deemed safe, and anything on the outside of that firewall is dangerous. Well, that worked back in the day during a very data center centric world. Well, think about how we use applications and how we work today, right? We use applications through SaaS, which is software as a service. We use applications through public clouds, which is like an Amazon AWS or Microsoft Azure, something like that, or even a Google's Google Cloud. So the way we work has changed. There's more endpoints in the field, and endpoints are like devices, right? You could think about a desktop computer, you could think about a laptop, a smart device like a cell phone, a tablet. So if you want to extend the corporate network to those devices, traditionally you would do that with like a virtual private network or a VPN. But how are you going to secure that? Well, with something called zero trust. So a new type of cybersecurity is zero trust, where you're essentially, based upon your level of permissions in the corporate infrastructure, you're allowed to access those individual applications. Does that make sense? So if you don't have the permissions to access certain parts of the organization, you do not get access to that. And zero trust allows you to make that bridge or that connection between, okay, let's verify on every single step of the transaction. Should this user have access to Workday? Should this user have access to Slack? Should this user have access to Zoom Info or whatever, right? I'm just giving you examples. So if I had to do it again, I would specifically go work at a cybersecurity company in sales, either selling into large Fortune 500 or Global 2000 customers, or in the SLED market, which is state, local government, and education. Hey, Manny Explorers, what's up, dude? Welcome to Miami. Thank you for being here. It is a very wet and rainy Saturday night here in Miami, Florida, as we are overlooking the Bank of America Tower. Hey, Ralph is here. So hello, everybody from Windsor, Canada. Good to see you. I will warn you guys, if you come to Miami, all the sidewalks are like walking on a sheet of ice whenever it rains. I'm not sure why, but it's extremely slippery. So Deep Value Alex says, what do you guys think about the new humanoid robot revealed by Tesla? So let's talk about that actually, because I think this is going to be an interesting and fun topic. I thought it was an absolute embarrassment. Now, again, I hate being negative. You guys know me, I'm always very, very positive. But be honest, were you guys impressed by the Tesla bot? I mean, that thing looked like a joke. I honestly, when they first unveiled it, I thought it was a joke. I thought Elon Musk was playing a prank. I'm like, okay, this is funny. And I was like waiting for the next, like the real Tesla bot. You know what I mean? Because Elon Musk is a very crafty character, right? And Elon Musk is a guy who would... See, that's why you gotta watch out. These people in Miami, they're nuts. New Yorkers are nuts too. But at the end of the day, Elon Musk is one of those crafty characters where he would unveil, or something like that, a fake Tesla bot, right? And say, just joking, here's the real Tesla bot. And that's literally what I thought he was gonna do, but he just unveiled what he unveiled, and I thought it looked really terrible. But I hate being negative, I hate throwing stones, because I know a lot of people worked really hard, but that thing was just, it looked like a little bit of an embarrassment. And that is just comparing it to the Boston Dynamics robots. Now, maybe just the look of it was a little bit wonky and a little bit crazy, and maybe its capabilities are cool. I don't know, but to me, it just looked absolutely horrible. Yeah, Dan Zhang says, Tom, first generations of anything will look like a joke, and that includes the first Tesla car that came out. That's a good point. Dan Zhang, that's a very good point. So maybe I shouldn't be making fun of it. I'm always a very positive guy, but when I saw that, because I was super hyped up about it, it just looked a bit ridiculous. Charlie Richardson, good to see you. Laytha says, let's not forget that Musk sold flamethrowers on the internet and thought that was a good idea. I actually thought that was kind of cool. Not gonna lie, Laytha, I thought that was actually pretty cool. So here we have the beautiful Aston Martin building. I can't wait till this is completed. Hey, JJ is here. Says greetings from San Diego. Good to see you, JJ. Welcome. Okay, team, we're coming up on hour 2, but I before I forget, I wanted to tell you something. So this is what I spent my day doing today. And I always tend to do this from time to time. And I think that many of you, if you're interested in real estate investing, you should do this as well. Regardless of if you have money to buy real estate or not, right? You should always be looking at deals. So what I did is I rented one of those city bikes. Yes, we have city bikes here in Miami too. Not here downtown, but South Beach, all the way up to like 70, 9th Street, around there. So I was riding around for maybe 2 or 3 hours, different neighborhoods in Miami. And I was looking at all the houses for sale. I had my Zillow app up. And I came across many homes that were for sale on Zillow, but they already had the sold signs on the properties. And I was looking at these, I'm like, this is still crazy. Many of these homes were 3-bedroom, 2-bathroom homes in North Miami, around there. And well, the list price, I don't know what the official sale price was, because maybe these just closed. But 3-bedroom, 2-bathroom home was going, I think it was, what was it? I think it was like $499,000 to $500,000 for a 3-bedroom, 2-bathroom home. And these are just very basic, classic Florida style homes, right? Very boxy. And in this environment, right, when interest rates are going to 7% on a 30-year fixed, and we still have some of these homes selling at those crazy prices, you know, 3-bedroom, 2-bathroom selling for $550. I mean, it leads me to believe maybe these are just people that are buying these homes in cash. Maybe they're investors that are buying the homes in cash and then refinancing that property to use that cash to make further investments, which is essentially tax-free, and then you could write off the interest. I don't know. I just wanted to give you guys that little piece of market research. So in your particular neighborhood, wherever you are across the United States, you know, I would be very observant. You know, maybe take a bike ride through one of the neighborhoods that you want to purchase a rental property in, and just see where the market's at. Because as of right now, we're still seeing some of these crazy prices, and they're closing deals on them. So I don't know, I just wanted to quickly bring that up. So regardless if you have money to buy the real estate or not, you should always be in the market looking at the deals, just so you can sort of get the repetitions in. All right, this is the Miami Tower. Hey, I saw an interesting comment from my friend Tariq, and it was a very good point. Hey, Jose, thank you for coming, my friend. I appreciate it. Let me see. Tariq says, Tom, the Boston Dynamics version is almost 30 years old. Also, the price point is nowhere near in the realm of Tesla, which is under 20,000. That's a very good point. I did not take that into consideration. The Tesla bot is 20 grand. Okay, Boston Dynamics robots are probably ridiculous amounts of money. I did not think about it like that. Thank you for that perception. I appreciate that. Yeah, the ABX girl says, Tom, only 18% of Florida residents have flood insurance, and losses so far are $6.67 billion. Well, I think the vast majority of people who don't have the flood insurance
are people who don't live, you know, in like Naples or Fort Myers, right? When you're literally right on the water. That's like living in Long Beach. The people who don't have flood insurance are people that live in like North Miami Beach or, you know, Central Florida, things like that. But I definitely agree that there's probably some people that don't have flood insurance. But I think at the end of the day, maybe people will get some money from FEMA. I don't know. It's just, it's a horrible, horrible situation. Hey, Siva says, thank you, Tom, for the great conversation. I appreciate you. Billy says, how's Golden Glades area for rentals? Billy, if you want, I'm not sure, I never want to say to somebody, oh, send me an email. But if you want, can you send me an email? I'd like to connect, if you want. But team, we are coming up on hour 2, and I got to get the bus a little bit early tonight, because I'll tell you why. There's a big event going on at the FTX Arena. I think there is a concert there or something. So I want to quickly say thank you all for joining me on this very rainy Saturday night in Miami, Florida. I hope every one of the viewers of Walks on Wall Street has a fantastic weekend. Recharge, regroup, because tomorrow we will be doing our Markets Look Ahead live stream, where we will be going day by day talking about the major events coming up next week on Wall Street. You do not want to miss that. So if you're new here, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams 5 days a week, okay, at 8:30 p.m. Eastern time, between Magic City here in Miami and the greatest city on earth, New York City. We'd love to have you guys stick around for that. If you want my thoughts on the financial markets, you could scan the QR code to your right and punch in your email to receive the free Behind the Street newsletter, where we cover emerging markets, the US equity market, fixed income, and the like. So Cayenne Pacific, thank you so much. Vega, thank you so much. Day's Work, NPC 007, I appreciate you. Neil Bell says, enjoyed the stream very much, Tom. Thank you so much, Neil. I appreciate you. CR says, safe trip home, Tom, and many thanks. Thank you, CR. Estelle Laytha, our great moderator. Thank you, Laytha. Vonda Howard, DWG, photos from around New York. Andy, Karina Thompson, Dr. Longest, Sunshine After Rain, Emilio, Wendy, England, Elias, Mohammed, everybody. Have a fantastic rest of your Saturday. Recharge, get ready for Sunday. We got a big week ahead. Austin City Limits, all of our moderators, thank you so much. Enjoy, everybody, into the mighty bull. Have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. I'm gonna get a drink in the Whole Foods, and I'll see you guys next time. Appreciate it.